All right, joining me on the line today is Bill Fleckenstein. Bill is the president of Fleckenstein Capital, a money management firm based in Seattle, Washington. He writes a daily market wrap column for his website, FleckensteinCapital.com, as well as a popular column called Contrarian Chronicles over at MSN Money. Bill, thank you so much for taking time to join me on Follow the Money Weekly Radio.
Thanks for having me.
Absolutely. All right, Bill, let's start with the political gridlock that's aggravating Washington right now surrounding the entire debt ceiling debate. One of the theses I think that I've kind of developed over this is because I'm so anti-political, and of course our show is called Follow the Money. It just seems to me that this might be craftily designed to spur a financial salvation moment to where it might spark a rally in the stock markets. And now we're even hearing this week that Obama is telling the banks secretly that there is not going to be a default. What are you making of all of this? I'm of the opinion that we're going to see a last-minute deal and avoid default, as we always do. Do you agree?
Yeah, I think that there will be a deal and there won't be a default. And even if there isn't a deal, there won't be a default on August the 2nd because there's other things that can be done. I mean, this is political theater. We've seen it many, many times, regretfully. It's a political event, not to say that we don't have serious problems, and not to say that the leverage of this can be used to help force the lobbyist-produced members of Congress, or bought and paid for by the lobbyists, to do something right. But mostly this is about political theater, not about trying to get anything done, sad to say. I don't think there's any way that Obama could have told the banks that, this was a done deal, because how would he go about telling them? I mean, those kind of stories tend to go around. I don't think any of these guys really think that they're actually going to default. As to who's going to give in the most, I don't know. I think perhaps it will have to be the president, simply because he's got the least tenable position right now, since he hasn't really proposed anything. Mm-hmm. But who knows? It's just political theater.
It is, and possibly inspired to, because of course you look around the globe, we have the European debt crisis, we have China obviously displaying some forms of problems, and then of course the U.S. It really desperately desires to hold on to the mantle that it's holding now. What a great opportunity here to act as if, we've solved this problem, last-minute deal, financial salvation, the markets rally, beautiful story, because they've run out of the QE2. They need something. What do you think about QE3 going forward? The Fed has been making all kinds of noise, and you've written extensively on the Federal Reserve. What's your take on the end of QE2 and into this new QE3 era? Is it upon us?
I suspect it will be upon us in the not-too-distant future. Exactly when and what the catalyst will be is really kind of hard to say, but I suspect it will be. I mean, the fact of the matter is that virtually no one in Washington, D.C., at the Fed or in the Congress or in the White House understand that the reason this economic recovery has been so lame has been because we had an epic bubble which burst. That bubble was, in essence, blown by the Federal Reserve to bail out the consequences of the prior equity bubble, which wouldn't have been anywhere near as difficult had they not created the credit/real estate bubble. So they don't understand the economic problems, and so thus they are going to. They're going to continue to stay with us, and they don't understand them. It's not like if they understood them, they'd go away. But if they understood them, they might actually be able to think about doing something intelligent. Thus, it'll.
You're asking a lot there, really is.
Well, it's not that complicated,
right.
but so it will fall on Bernanke will feel it's his job to, try to get the employment down, especially as we start to look to 2012 and the politics, start to get the upper hand again, or even more so than usual, I should say. So there will be QE3, I guess. Is it good policy? No. Just kind of kicking a can down the road a little bit, but we're getting closer and closer to when the United States it's not going to be about, we can't default really because we can print the money. Mm-hmm. And for that matter, Social Security, the special securities that treasuries they could own could be sold in some way to the Fed or lent again. I mean, this whole thing is just, again, political theater. But as long as you have a printing press, you can't default.
Mm-hmm.
So we're never going to default. But the question is the money that gets paid back going to be worth anything? So when the rating agencies, rattle people by saying, well, we might downgrade them, it's really kind of silly because we can pay. The question is what we pay people back in might be more or less worthless.
Yeah, and I expect, we've even forecasted, we're going to lose our AAA credit rating, and we don't have to default to lose that. And really, what do the rating agencies mean?
But on the other hand, if you have a printing press, how can you not be AAA in that currency?
Yeah, that's true.
The definition is not, are you going to get paid back in any kind of meaningful currency? Are you going to get paid back? Well, yeah, you get paid back, but so it's really not about the AAA status. We don't, it's about the fact that we resort to using the printing press.
That seems how they're solving everything, and we were warned about this, of course, from the founding fathers about all of this, of course, whenever they came over from England. They were fleeing that central banking scheme that had, wreaked havoc upon England, and of course, now we have it right here in our own backyard, and we're seeing the fruits of it. In your opinion, because obviously you're a successful money manager, what should investors who believe, as we do, that the debt ceiling is going to be raised and default's going to be avoided, what should they be doing now? In other words, what's the debt ceiling trade in your mind? Or is there one?
Well, there is no trade. It's a non-event.
Mm-hmm.
It doesn't mean anything. They're going to raise the debt ceiling after they don't for a while, and then the markets will have a reaction. It doesn't mean anything. Raising the debt ceiling is not the problem.
Mm-hmm.
The problem is the hangover from the real estate bubble, the fact the Fed prints money, the fact that we have been pursuing bad economic policies in this country for a very long time, and now we've hollowed out the manufacturing, the job creation sector, so to speak. And it's been a long process. We need to get at the out of control spending on the part of bureaucrats. We need to figure out how to get healthcare spending reoriented in a manageable way. There's a lot of things we need to do, but raising the debt ceiling is a complete sideshow.
Mm-hmm.
It's been in 1980 it was like under $2 trillion. Now it's $14 trillion. How's it work? It ought to be called the debt floor, not the debt ceiling.
There's no doubt about it. Okay, well, I was reading one of your recent columns over at MSN Money, and I like to read those. In fact, they were very helpful to me back in 2008 when I was putting together a book called Bankruptcy of Our Nation, and you had written some great pieces about the Fed. You've been nailing this for a long time. Even you have a book on Greenspan's bubble, and you've been talking about this for a long time. And in one of your recent articles, you talked about I think the title was Why Google and Apple Can't Lift the Market. You made some interesting observations. We've had the slew of stellar earning reports that have come out from many companies, many of the big corporate giants on Wall Street. And yet the overall market just seems to be sputtering. It's seeming to have a difficult time putting the party hat on, as you said in the article. Speak to that. Why is that? What's happening in the markets?
Well, the market has gone up. The stock market has gone up as a function of liquidity provided by the Fed, and certain parts of corporate America do business worldwide, and they've done well. But it's very unbalanced. The average consumer, the average person is not doing well. So they don't have any semblance of a real economic recovery. It's just been precipitated by money printing and the suppression of higher interest rates. So if interest rates went to where they might go in a non-Fed rigged world, so to speak, that would have a negative effect on housing, which would all have another negative effect on the average person in businesses. So the economy is really imbalanced, and thus the stock market doesn't really, quote unquote, deserve to go up. It's just where it is because of the money that's been printed.
Mm-hmm. Well, let's step back for a moment, look at the bigger picture. I mentioned before, investors have a insurmountable job on trying to be wise with their capital right now. We have the sovereign debt crisis, as I mentioned, over in Europe, consistent concerns and warnings being issued over China. And, of course, the U.S. has its own financial woes, and which obviously have come through the financial distortion, the economic distortion of the financial markets through the poor monetary policy from the Fed and just, flat-out dumb fiscal policies that we've been seeing lately. But you're a successful money manager. You're moving money around. You're operating in this environment. What tips or strategies would you give to investors who are attempting to find investment opportunities amid all the current financial distortion?
Well, I think you have to realize that the money is no good. The currency is no good, and there's more inflation than the Fed says. So you have to protect yourself against the money printing on the part of the Fed, and the fact that all this political expediency and maneuvers on the part of Congress and all that, they're not fixing the problem. You have to protect yourself from the consequences of all this short-sightedness. We're going to have a crisis in this country that will be focused on the dollar and the bond market or some variation. We'll have a Greek so-called pigs type moment, but it won't be exactly the same because we can print our money. We will be penalized because we can print our money, and we have printed our money, and the world will say, hey, we don't want you to do that anymore. And so that's going to happen. I don't know when it's going to happen. And meanwhile, the dollar is going to continue to be worth less, not necessarily against the euro or the yen, although it has been happening, but against goods and services. I mean, inflation is the path that the Federal Reserve has chosen. People that keep talking about deflation just don't understand how that all works. We haven't had any deflation. We weren't going to have any deflation. Bernanke told you. I mean, when money can be run on a printing press, how do you have deflation?
Right.
Can real estate decline in value? Yes. Can other assets decline in value? Yes. Is our debt repayments difficult? Yes. Will certain people be hurt? Yes. But will the value of your currency be worth more? No.
That's true. Well, okay. Well, based upon that long-term economic outlook, which we both share, what are some of your favorite asset classes or industries, sectors in the financial markets?
Well, I've only really favored one, and that's what I call the beneficiaries of money printing, which is, precious metals, certain miners, certain ancillary service companies that are in the business of supplying the mining industry. So I've been pretty much focused on those kinds of companies. The only household name that I've been sort of friendly to has been Microsoft, because stock's been trading at 10 times earnings and continuing to grow and doing well in all their businesses. But there are other companies in corporate America that probably are fine, that sell at 9 or 10 times earnings, that are pretty good value. But I don't know why I would want to try to make an investment predicated on the world economy working when every time it doesn't work, there will be more money printing, and there's already consequences of what's gone by. So I would rather stick to money printing beneficiaries.
Okay. Well, and we've developed something called PACE, the PACE investing strategy, which P stands for precious metals, AC, agricultural commodities, and then E for energy. What do you think about...
No, I think that makes sense.
What do you like?
Yeah, that's a sound strategy.
Do you like agricultural commodities in this environment?
I don't know enough about them.
Okay.
If I did, I probably would. In other words, I can stick with things that I understand, that I can that I know what I think their response to certain things are. I think I understand the personality of how they trade, so I can stick to things I know. If I knew more about those other things, I'm sure that there's a lot of money to be made in those areas by guys who know what they're doing.
What about energy? Do you have any thoughts on energy?
Not really.
Okay.
I mean, it's just I have chose not to focus on energy because I wanted to focus on something that would be. I don't have to decide whether the money printing will lead to GDP growth or not.
Mm-hmm.
But do I own an energy stock? I mean, I'm not opposed to the idea. It was easier for me to put my efforts into other areas, and so since I run my own money and some like-minded souls along with mine, I can concentrate on things that I feel more comfortable with. I'm not trying to run money for the public where I need to have a diversified portfolio and things like that. So,
sure, you're able to kind of.
I'm not even slightly diversified.
So you're able to overweight in that area and then understand it very well, and then just focus on it. Now, when it comes to precious metals, you have talked about mining companies, and I think that's great. There's been some great success stories recently, and of course, there's been a lot of action in that area, up and down. Of course, they're highly speculative, as our listeners probably are familiar with. What about hard assets? Like precious metal itself, gold, silver, palladium. Do you like to hold those in addition to mining stocks?
Yeah, absolutely. I mean, because at the end of the day, the mining stocks are a derivative of gold, which is itself just a price. So.
You write a weekly column, by the way, over at MSN Money, which I would recommend that people check out. You also have your website, FleckensteinCapital.com. If people who are listening to this program would like to learn more about you and your work, what's the best way to do so? Just to go to that website, FleckensteinCapital.com?
Well, yeah, except for you got to pay to go to the
Okay.
And I mean, I've been writing a column. I've sort of been paid for any of my columns since I first started doing it in 1997, and so there's no freebies. There's the MSN thing. But on the other hand, my website, it's a massive $10 a month, and I also answer questions for people. So I wanted to price it at a price that anyone could afford it, but I'm not giving. I'm not going. If it's not worth paying for, I'm not doing it.
Sure, totally understand. Well,
that's sort of my attitude.
Yeah, well, you've written some good books. The Greenspan's Bubble was that particular book was really interesting, which you really nailed the whole idea. Do you have any other books in the works currently?
Nope. I'm one and done. I had my one idea that I had to exercise, exorcise, which I did, and somebody else can write the next book.
Well, you lose enough hair doing that. People don't realize how much how stressful that can be. Even if you enjoy writing, it's a pretty tedious process. But you did a great job on that book, and people can pick that up as well. I guess still in stores. I was in Barnes and Noble the other day and actually saw it. So I know it's.
The amazing thing. My favorite part about having written the book is it's in about 11 or 12 different languages. My friend of mine is in Mongolia, and he saw it in Russian in a Mongolian bookstore. How about that? In Mongolia, in Ulaanbaatar.
That's bizarre. I appreciate your work. They can find you at Fleckenstein Capital. My guest today, Bill Fleckenstein. You can read his financial column over at MSN Money. And again, his website, FleckensteinCapital.com. Bill, thanks so much for joining me on Follow the Money Weekly.
All right, my pleasure.
Thank you.